FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.
Welcome. You are listening to the Financial Survival Network. I'm Kerry Lutz, and today is 9/9/19. Well, you haven't heard from our next guest in a while, but he's got some definite views. He's been watching. He's been involved, even though he's kept a low profile. I'm talking about Peter Grandich. Find him at petergrandich.com, and it's always great to have you on, Peter. So, hey, we've seen the precious metals markets really do a 180, haven't we?
That's true, Gary. First of all, it is a true pleasure. I don't do a lot of interviews, but I've always appreciated you. I always believed you've been an objective and a fair-minded journalist. You know, the journalism is basically, in my opinion, gone in the toilet. These journalists on both sides of the aisle no longer come to interview. They come to really make their own statements and take issue with anybody that disagrees with it. So I will always make time to speak with you. So let me begin by that and then answer your question. That a year ago, I entered back into the gold market in a very strong way. In fact, I liquidated anything that wasn't related to gold except one stock and put my basically entire portfolio across the gold spectrum, whether it was physical bullion, mining shares, ETFs, and the like. And thankfully it did, because the stock market basically has stayed flat during that time. Gold physically is up about 25-30%, and most mining stocks, except on the junior sector, and ETFs are up anywhere from 100% or higher. So I've called it a mega bull market. I did write about 7 or 10 days ago on a blog that the easy part is over, that while I still believe we're going to go to a new nominal high in gold, it won't be a straight line like it's been the last 3 months. The correction in recent days was healthy. But like I said, I still think before it's all said and done, when you say what the gold price is, you'll have a 2 in the front of it. And I think that's within, 1 to 3 years.
Yeah, I'm inclined to agree with you. It was amazing. You followed gold for probably a lot longer than I have, Peter. And the strength of gold during what is normally a seasonally very weak period of the year for gold, and we should add silver to that as well, was really quite surprising.
Yeah, what's interesting, I think if you take a step back, and of course hindsight's 20/20, but I had written when I did this almost a year to the day, I wrote about 3 stages. I said the first, which was the biggest challenge, we had been stuck in a trading range for several years with not managing to get above or stay above between 1350 and 1400. It wasn't too long ago, a year or so ago, with the general media, which, by the way, people have to recognize. You're never going to turn on and hear the general financial media being positive about gold. Gold is kryptonite to their work. So they're not about to get behind it at all. But, words like relic, and even people were saying, cryptocurrency has replaced gold, gold's dead, all this other stuff. But all of that really did a lot of good things. We traded sideways for several years. We washed out a lot of the people that held it at higher levels. We saw a lot of the speculative people who used to, run into it and run out of it, run to things like pot stocks and cryptocurrencies. The stock market in general kept all, people's interests. And gold really built a tremendous foundational base, in my opinion, that when we broke above 1350, 1400, I said I felt it'd be a rather quick pop to 1500. Not as fast as we did get there, but it happened. And then there'll be a last line in the sand by the gold bears. Let's not forget, there still remains a group out there who seemingly forever try to take advantage of gold, especially in the paper market. Their control has dissipated or been lost. They can only influence it now for a few hours or a few days, when they used to be able to influence for a few years. But once that consolidation and all is done, and I think in the last few days we started to see that consolidation. Once it's done and the next leg begins, it'll be more volatile. It won't go straight up, but it's going to be the most dynamic part of this move, and everything, including what is left of the junior resource market, will participate. But for now, and I think for the balance of the year, consolidating and trading, somewhere between 1450 and 1550, or even up to 1600 if certain things get worse geopolitically or economically, is the most likely scenario. It's a very good scenario. And one thing, I don't talk to many anymore, but it was a job for almost 25 years on a daily basis. Gold mining and silver, quite frankly, mining CEOs were just a year ago basically having meetings on how do we survive.
Yeah.
They really couldn't afford a much lower price, or else really things would get drastic. And now take a gold miner in just a year. Now they see $300 higher price. Well, listen, this is not an industry where costs went up associated with that rise. Basically, costs are pretty much the same they were a year ago. So what we're going to see in the next 6 months as quarters and quarter comparisons come in, we're going to see a lot of better bottom lines that's likely to lead to more interest. We're likely to see prices rise. And hopefully this time, the majors won't do things foolish and borrow a lot of money and instead use the higher price of their stock as currency to build their balance sheets better. I think there's going to be an awful lot of increase in mergers and acquisitions. I think what Newmont and Barrick did in Nevada is going to become a boilerplate for what's going to transpire around the world. We're going to see more strategic alliances and guys sharing assets. I'm involved in a stock in West Africa that has a mill where Barrick would like to develop a mine that they already have set to go. There, you're likely to see some sort of arrangement where you're sharing that. And I think just the whole metals and mining industry, after such a long time of struggling, and only having short spurts of excitement, are going to have a lot of years ahead of them where things are going to be a lot better to work in an environment than had been in quite some time.
Yeah, you make a great point. The junior mining industry, I was in at the Silver Summit in, not the last one, but the one before in San Francisco, and Bitcoin was really hitting its peak at that point. And that's all they were talking about was Bitcoin. They were downcast. I really thought like they should be passing out Prozac instead of candies at the entrance to the hall. They were counting paper clips.
FSN Radio. It's all about what's next.
Osino Resources is a Ross Beatty-backed gold exploration company in mining-friendly Namibia. Osino's district-scale land package is situated near 2 producing gold mines, one of which Osino's management team previously developed and sold to B2 Gold. Osino's founders and management are experienced mining professionals who have already successfully developed and sold 2 companies in the past 7 years. Osino has an excellent shareholder base with Ross Beatty owning 20%, insiders 5%, and Resource Capital Funds 8%. This is an exploration company with drills turning that you'll definitely want to pay attention to. Osino trades in New York under the ticker OSIIF and in Toronto under the ticker OSI. To learn more, go to osinoresources.com. That's osinoresources.com.
The Financial Survival Network. It's all about what's next.
Listen, I don't know if it's Bitcoin itself. I think I've argued that the cryptocurrency industry is here to stay. But understand one thing, and I'm not the person that said this. It was actually Frank Juster, who was on another interview a day before I went to do it, and he said a very good point about that. He says, the day this cryptocurrencies truly threaten the sovereign currencies is the day they're going to get whacked over the head. I don't think it's quite there yet. I think governments still think that, it's not that big of a budding industry. But if it was to grow to that, and they literally saw billions of dollars siphoning away from them and not being able to control it, I think you'll see a lot more movement in government to control or disband or change somehow how that industry runs. But gold, I think, just has it has a 2,000-year history. It is still, I think, a much better vehicle. No one can go on a computer and press a couple buttons and steal it from you. It's still, I think, something recognized, and I think that's also, and I think this is the last, and it won't come until we're probably well into this third cycle, Terry, but I've argued for a few years now, and I'm not alone in it, that particularly China and Russia, who's been buying massive amounts of gold. I think it's all to eventually introduce an alternative to the U.S. dollar as a world reserve currency, and to eventually, when this whole debt crisis becomes paramount and people know, paper monies and this debasing currency down to zero, because we are effectively in a currency war right now in the world, I think we're going to see a new type of world currency that will be backed in some way by gold, and so people can have confidence again in paper money. But by then, the gold price will be, well north of 2,000 and all. But like I said, I think I don't have anything but my own greedy self to profit. I don't represent any mining companies. I don't represent anybody selling survival stuff or ammo or stuff. I'm speaking strictly from a personal investor standpoint. I really think this is a very good time for things related to gold and silver. I'm not in the same camp with base metals. I think really you need to focus just on gold and silver. I think base metals are going to have much more of a challenge because of, I think, the world economy is going. But I just think, and there's so few people left. I did a little research in recent months to see what happened to people I used to know 5 or 7 years ago in the so-called hot asset crowd.
Yeah.
Very few are left, and the few pictures I saw that were still there, they didn't have big smiles on their faces. So I don't think there's a lot of overhang. I don't think there's a lot of immediate speculative craziness that's going to return. And I think that all bodes well for those that, have some investments in the gold and silver market.
Yeah, it just makes a lot of sense. Insurance policy. I tend to agree with you about where currencies are heading. You can't debase forever and expect that to be a prescription for economic growth and prosperity. It just has never worked that way throughout history. There's no reason to believe that it's going to work that way now. It just seems to me amazing that they've kept it going all these years.
If I may add, before we run out of time, I think there's another point that isn't quite yet being discussed in the major media, but I think it's going to become a critical point to the financial service industry. We now know of negative interest rates. People have at least heard about it. They somewhat understand it. I'm still struggling with it, Kerry, because 35 years ago, when I started as a stockbroker, they gave me a 10-year CD at 15% interest rate to call people on, and people hung up, said it wasn't enough.
Yeah.
And now we're talking about where we may have the privilege of bringing our money to a bank and paying them to hold on to it. But why, in all seriousness in all of that, is the whole retirement industry, all North America or around the world, it's not anything too different than here in the U.S., where I work and specialize in, has worked with something known as the 4% rule. And that's basically if you can earn 4 or 5%, replenish whatever you spend in your retirement, and you live until, God comes and calls you and takes you to heaven, hopefully. Well, the problem is if we're going to negative interest rates or zero interest rates,
how's that work?
The 4% rule is gone. I don't know how you're going to work retirement. Is everything going to be capital appreciation risk? Is that the only way one is going to be able to sustain themselves? And that's the unspoken, real gorilla that no one, the 800-pound gorilla, is speaking about, is that if we really shrink interest rates worldwide down to nothing or below nothing, how does everything that's been built on income and people dependent on income stay afloat? And it may not be a week or a month till that comes, but at this rate, it won't be that long ago before anybody that's trying to do a financial plan, whether retired or planning on retirement, really you have to throw out the books. And I don't know what the answer is to that. And it's not something that's spoken of now, and probably people that even have considered it as I have pushed it back under the rug and say we're worried about it later. But it is going to be an extremely acute problem before too long, in my opinion.
Yeah, well, that's why a lot of people, Peter, have gone to real estate. People I know investing in single-family investment homes, turnkey properties. My friend Jason Hartman, he does this, and, I work with him on it. But there, you buy the right properties, and not in New York City or LA or San Francisco or Miami, but, in places like Little Rock, Arkansas, in Jackson, Mississippi, you can make 8 to 10% cash on cash return on your money with all the closing costs and everything else. And it only goes up, and your debt goes down, and the inflating depreciating dollar makes your loan repayments cheaper. And it just seems like a lot of people have caught on to that. Obviously, there's risks. There's always risks in every investment class, right? I mean, if you think even that treasuries have no risk, you're crazy, because there's always risk. But people are looking for that cash flow. They're looking for that yield. And they thought they found it with, master limited partnerships for like nat gas, and that blew up. And every time you find a high yielding sector, it invariably blows up, Peter.
Yeah, and it's interesting that you said real estate. J.P. Morgan did a study. It was out not too long ago, and it went back to 2000. And why 2000 is important. Over 70% of the licensed financial advisors in the United States have only been practicing since the year 2000.
Wow.
So that's the majority of people that are supposed to be professionals in giving, advice to investors. And when asked people, well, what's the best investments from them? Almost everyone said stocks, when in fact it was real estate first and gold second. Because people forget in the year 2000, gold was under 300, and now it's 1,500. It's up 500%. The stock market, even if you reinvest the dividends and all, is not up 500%. I think it's up 150% on paper, and if you reinvest the dividends, you could even double that and make it 300%. And, so here's the two best investments in the last 20 years. Almost no regular investor in America right now has in their portfolio. Like you said, real estate and gold is really an interesting phenomenon. But that's why, billions is spent continuing touting, the financial assets of stocks and bonds, because the industry lives on that and not the things that we just spoke about.
Yeah, for sure. And real estate, it's illiquid. Okay, that is definitely an issue. Although with the money market so free, you could always refinance. You might have problems selling it. Certainly in 0809, it went down in value. At the same time, when we look at the stock market in 08 and 09, it got killed. So if you went in right at the bottom, you were sitting pretty. You're up 4 or 5 times. But over a 20-year period, unless you're the master timer, who I've never met that person. Well, I've met a couple of them, but it's rare. But unless you were able to do that, then you really did not get the returns that you were looking for.
Let me close on this. So my observations now that I spent my entire time in the planning, in the estate planning and retirement planning and helping businesses have exit strategies. That's our livelihood. We do that for the general public and professional athletes. Here's how people come to us that have money. This is the way they've come to us. The first is they inherited it. They're not the first I got it. It's been passed on and meet them. The second is they're small to mid-sized business owners. The third is they invested in commercial real estate. I don't mean just flipping houses, but true commercial real estate. The only time we see people that have made money from the stock market, if they didn't work in the financial service business, selling was, they were mid to upper management at publicly held companies, granted a lot of options over the years, and made money. To this day, I don't think I've met 2 people that came in and said, oh, mom and dad put a few thousand in the market each year and ended up with $1 million. And so it's very interesting that way you find most investors who are extremely invested in the stock market, yet most people with wealth, of real wealth, didn't make it that way. And so like you, and again, I'm not at all an expert on real estate, but I think, the time has come that financial assets that most people chase, stocks and bonds, have really seen their best days. And as much as it was good to be fully invested before, if you're not invested at all, I think that's going to be better than being invested or even margined in things like stocks and bonds. I mean, I do understand why bonds still rise a little because of this insanely monetary decision after watching it fail in Japan for almost 30 years. Other countries, Germany and the U.S., appear that they want to follow that track and go to zero and negative interest rates. And once we get to that, then even bonds will get to the point of there's really going to be no more upside to them. And I just think there's going to be, there's a price to pay for Peter in America. Peter and Raven Paul, or Paul's Rob and Peter. But whichever
Robbing
one
Peter
it is,
to pay Paul and Paul to pay Peter.
Yeah, they're both broke.
Yeah.
And, no one wants to pay a price for that, but I think the price is very close to being called upon, and I just don't think this is a time to be anything other than a live chicken versus a dead duck.
Yeah, couldn't agree with you more. Anyway, check out petergrandich.com. Peter, it's really great to have you back on the show, and we appreciate your sharing your insights with us as always. Interesting times. We hope we'll all be around to see what happens next. And questions, comments for Peter and myself. What do you think about what Peter said? What do you think about where the market's heading and where gold, precious metals are heading, the economy? Email us, kl@kerrylutz.com, Twitter feed @KerryLutz, Facebook page is Financial Survival Network, and visit the website, financialsurvivalnetwork.com. Sign up for our newsletter. And if you're listening on a podcast or on YouTube, please subscribe, like, and share. This information needs to get out. Like you said, Peter, the mainstream is not the messenger that it once was, and they're strictly delivering the party line. You can't trust them, so you got to look elsewhere. Peter, great talking to you. We'll talk to you again real soon.
Thank you, Kerry. God bless.
FSN Radio. It's all about what's next. Go to financialsurvivalnetwork.com and sign up for your free weekly newsletter. You'll also get 3 free reports. The Financial Survival Network. It's all about what's next.